I would like now to introduce your speaker for today, Robert McKenzie. Robert E. McKenzie is a partner of the law firm of Arnstein & Lair, LLP of Chicago, Illinois, concentrating his practice in representation before the Internal Revenue Service and state agencies. He has lectured extensively on the subject of taxation. He has presented courses before thousands of CPAs, attorneys, and enrolled agents nationwide. He has made numerous media appearances, including Dateline NBC and the ABC Nightly News, prior to entering private practice. Since entering private practice, he has dedicated a major portion of his time to representation before the IRS. Mr. McKenzie recently received the American Bar Association Civil and Criminal Tax Penalties Committee's Jules Rithol's Award. The award recognizes Mr. McKenzie's dedication and achievement in the field of tax controversy. From 2009 to 2011, Mr. McKenzie was a member of the IRS Advisory Council, which advises IRS management. He has been selected as a fellow of the American College of Tax Counsel and serves as its president. He was vice chair of the ABA Tax Section 2003 through 2005. Mr. McKenzie is past chairman of the Chicago Bar Association Federal Tax Committee. He was dean of the National Tax Practice Institute from 1998 to 2002. Robert, welcome to the program. We're now ready to begin.
Thank you. Okay, welcome everybody. I hope we can get through this. The trust fund recovery penalty, to put it very simply, is the ability of the IRS to pursue the people running a company when that company fails to pay collected taxes over the government. And that could be collected excise taxes, or it could be, and in most cases is, withheld taxes from employees, which would include Social Security and Medicare withheld from employees and the withheld income taxes from employees. And it's very tempting for small businessmen when they run into financial problems to stop paying the government when they don't have enough revenue to pay all their expenses. And that's a mistake because in most cases the debts of the company are only the debts of the company, and the officers cannot be personally liable for those debts if they are properly incorporated or an LLC or a limited partnership. But the trust fund recovery penalty, Section 6672 of the Internal Revenue Code, specifically provides the ability for the IRS to pursue those persons in charge of the company or who had an impact on the payment of taxes by the company and hold them personally liable. So it's a high-risk enterprise for anybody who chooses to do this. And we'll get into the more risky parts of this fairly early in the lecture, and then we'll move to the detail of how the law applies, who can be held liable, and move on from there.